This is a very interesting time in Asia. I started investing in Asia during the financial crisis in 1997, and obviously Asia was a very, very different place than it is now. But I guess some of the lessons learned is that there's always going to be volatility, and if you stay true to your process and if you focus on fundamentals, these sorts of times are going to bring up fantastic buying opportunities. So one thing that is a little bit different about this time frame is if you look at a lot of the falls in Asia, whether it was the GFC or the Asian crisis or the taper tantrum in 2014, they're usually quite short and sharp. Asian markets this time have been selling off since February. So this is actually the longest downturn, even since before the GFC. This is now a longer, from peak to say we're at the trough now, that's longer than what it was during the GFC. And so as a manager investing in Asia, that's a really long, it's like kind of a slow grind down. And that, creates different opportunities than very short, sharp things like the taper tantrum, which was over in a few weeks. So what we're doing is, just as I said, we're staying very true to our process. As you know, we are growth managers. And despite all these headlines about trade and geopolitical issues, for most of our companies, the growth has not been impacted at all. But Asian markets have sold down, so they're a lot cheaper, and they look really, really interesting. I guess the other thing that we've done is really look for domestic demand stories. So with all these headlines about trade, there is a lot of uncertainty, and it's hard to model precisely what's going to happen to stocks that are exporters. But in terms of domestic demand in China and in other countries in Asia like India or say Thailand that aren't impacted by trade, domestic demand is still very, very strong. So for about 9 months now, we've been very focused on domestic demand stories, and those companies are still doing very well. I think one thing is that it's not all doom and gloom in China. This is one message that I think is really important. And if you just read the newspapers, you think it's all doom and gloom. But as I said before, there's a way out in either scenario. If the trade war gets better, the trade war gets better, and that's fantastic. If the trade war gets worse, China's going to stimulate, and they have said that quite specifically. So I think that we're much closer to the floor than we are to the ceiling in terms of the sell-off in China. India is another very bright spot. The economy is growing very fast. There's a lot of very high quality companies there, and India is a market, particularly for Australian investors, where people don't have any exposure at all. And India is going to be the third largest country in the world, third largest economy in the world by 2030, and a lot of people globally have no exposure at all. So India is another bright spot. And then lastly, Thailand is the only country in ASEAN where we have decent exposure. We have nothing in Indonesia, nothing in Philippines, nothing in Malaysia. We do hold some Singapore banks. But Thailand, they've been under military rule for about 4 and a bit years now, and there's going to be an election in 2019. And going into that election, it's very typical in Thailand. You get a boost in consumer spending, and a lot of the market sentiment improves, and there's funds flow into Thailand. So that's another country where we've been adding exposure.